Okay, guys, I welcome you all. I welcome you all to our today's session. So, guys, please pay attention. It's not gonna be a long thing. It's gonna be just short. I'm just want to show you a short. What time is it? Yeah, so we can maybe wait for almost 2 minutes. We see maybe if others are still coming to join, and then we're getting started soon. 3 minutes, only 3 minutes, guys. 3 minutes. It will be enough. 3 minutes. Okay, guys, I think it's time now. So now I'm going to be sharing my screen, the platform, MetaTrader 4, the one that I'm using for currencies. So let me share the screen so that you can be able to see what I'm going to share with you. So, okay, guys, I think you can be able to see what is on the screen. So now it's going to be our start. This is our start. This is how we start. So I'm going to take you step by step on this strategy. Remember, I show you bank trading. It's not retail trading. So this is not the content that most of you know. This is very scarce to find, guys. So please pay attention so that you can understand everything. So this thing is not a short thing. It's just a matter of you understanding the key concepts that I'm going to share with you. So yeah, I think it's time, guys. For those who didn't join, or if you lost maybe some a part you don't understand, guys, I will simply upload this recording via the Telegram channel. So it's still safe for you. So okay, guys, let's start. This is Euro GPB, a hourly chart. So remember, we don't use indicators, and we have to clean our chart before starting to play the game. So now I'm going to clean everything here. I already have a template, created a template. So if you can check, here's our clean chart. You see, this is how we work. This is how we become a professional trader. Don't use any indicator and use a clean chart. We have to see two types of candlesticks there. We have to see the ones that are green for buyers and the ones that are red for sellers. So here we'll be studying these candlesticks, how they are formed. Remember, today's session is about the imbalancement in price action, how the price balances itself against the other side of the market participant. So this is today's session. So here, guys, as you can see, we're using an hourly chart. We are checking Euro GPB hourly chart. So let me see. Let me show you what I'm talking about. The imbalancement. here we're talking about like a situation where we had maybe one side of the market participants, or maybe where we had only buyers. In this situation, we had only buyers here. You can see the market was like rallying up in a fast way. So in this zone, only buyers were taking place. And then we want this type of situation. So Tina, we have to identify this type of situation where the buyers were only taking place or where the sellers were only taking place. So in this scenario, we're having a long side of the buyers. So we'll be discussing about this only highlighted zone. This is what I want to show you guys. So we'll be dealing with anything inside this zone. Let me maybe change its colors, maybe to be a bit clear, not too dark. Yeah. So we'll be dealing with market prices inside this zone. We'll be studying what was happening here. And then we want to trade like this type of movement. Now, so if we can check, guys, we had a rally in the market prices there where we had only buyers. So in this case, we had only buyers. Nah? So guys, you will see the biggest mistake many people make of chasing the market. That's why we don't chase the market. After today's session, you will understand why we don't have to chase the market. So in here, we had a rally in market prices where like we had only buyers in the market. We had many buy orders in the market in this situation. So if you can check, guys, this is very uncertain to find in the market, and you might find here there was a fundamental, or there was like maybe a sponsorship from the market makers. So in this situation, you have to always know that these people only, like who can only make this type of moves are the big banks, are the market makers. These are the only people who can be able to make this biggest move in the market. So meaning in here, there was no seller. There were no people who are selling. Or if we had the retail traders who were selling in this kind of situation, already they went out. They even blew their accounts. So, okay, fine. Here, we mark this level where the market started to create a bullish liquidity void. Remember this type of move where we had only buyers, we call it bullish liquidity void. This thing, it's a void. This thing, it's a void. And then we mark from that level, check, we mark from that level, we extend the level until the, can keep extending it. There is no limitation. And then 5, we've marked the level. I think we can be able to see. We've marked the level where the the blast move started, or where the bullish liquidity void started. We marked from there. If you can check, we took the previous red candle before the start of this biggest long move of a buy move. Remember, we call it a bullish liquidity void. Fine. So in here, remember, I'm going to be showing you on how to get this type of move, to trade against this move. So this, we call it a bullish liquidity void, and now we are going to be trading the opposite of this bullish liquidity void. So here we had a biggest blast move of where it only consisted of buyers. And then now we want to trade the opposite move of this one. So we don't chase the market. By the time you find the market creating this move, or maybe you find it here, you don't buy, you don't chase the market, because you don't even know where it's going to make a reversal. Because one day you'll be left hanging up there. So we wait, we leave it, like we just keep on checking how these candlesticks are delivering itself through the market. So if you can check, you can see by your own eyes where they were long and we had a biggest, it was a fast move. So fine, if you can check there, starting from here, starting from this zone, somewhere here, somewhere there. The market is now starting to lower, like, okay, let me zoom it in a bit. If we can check the candlesticks now, they are no longer having that momentum, or the market is no longer increasing by that momentum. It's now starting to create small candlesticks. If we can check the bodies of these candles, they were big, but then if we check here, they keep on decreasing. And then this is simply giving you a signal that buyers are no longer strong than before. They're no longer stronger than before. You can see. Then fine, we had another sort of a retracement. Then jiggy. The market were trying. It was like making sort of a continuation, but unfortunately, it started trading off from the levels, like a higher high. Maybe this was a higher of the day. Let's check. It was created around 4 o'clock. Okay, sharp. Yeah, 4 o'clock, somewhere there. So fine. Here, the secret that I'm going to tell you is that from where the market prices started to increase or to create a bullish liquidity void, there is no other way that the market doesn't come back and refill that inefficiency it left there. So this is what we call about imbalancement in price action. We had a long run for buyers, and then we'll also have another down run for sellers, but then it might not be a declining in the same way, like same momentum. Because here it was fast, then here when it balances the gap that it made here, it will be the same length, equal in length, but then it might not be equal like in the momentum. Like the momentum won't be the same. If you can check here, it was so slow, but here it was fast. But Oxalive, the secret is that the market, it's a must for it to come and refill or to come and retest somewhere there before the start of this bullish liquidity void. I think maybe it's clear. Or let me try to repeat for those who are lost. Guys, by the start of this liquidity void, you mark the level, knowing the market, it will come and refill this liquidity that was left here before, because here we had long buyers, which is unhealthy for the market to keep on increasing without decreasing. So here we had a lot of buyers, and also here we have to have sellers. So the market won't keep buying until infinity. So the more it buys, the more it says like, that's the reason the market doesn't like maybe just go straight up. It goes in zigzag, refilling the liquidities, balancing the price actions, something like that. Zigzag. So, okay, here, when we are aiming to sell somewhere there, our aim, our TP must be somewhere from the start of this bullish liquidity void. Remember how I took this start? It's where the bullish liquidity void started, or the first candle of being green for the blast move. So now we have to be checking on how do we have to sell. So here we had two conditions on selling. We had the first one, you had this one. Let me delete and do it as a zone. There is this, what I call a rejection block. This is a rejection block. So this was a very nice entry if you couldn't know when to enter a sell. The market came with a biggest blast move of buyers. Then it created something like sort of a retest, retest, and then a breaker. And then during the moment, the market is now breaking the level. Even if you miss this a breakout here, this was a true breakout of giving you a signal that is the market is no longer buying, because if we can check the bodies of these candles, they were now bigger. compared to these previous ones of being buying here. Then here it shows you these sellers are now getting into power. They're going to kick out all the previous buyers there. So even though we can check here again, if the market was really serious about going up, it should had created a long candles like these ones. But unfortunately, they were just giving you a signal or no, it's time for sellers. And then this retest from this zone, here it is, it's a signal for you to start selling. It's no longer like it's giving you an entry. This is a very nice entry for you to catch. But then whatever, or if you are selling here, your TP is somewhere below this level or before, but knowing that the market has to refill this move that it made. I don't know if you understand this. So during this process, the process that we are trading here, this move that we're trading here is the one that we call imbalancement in price action. That's the process where the market makers are trying to clear out all the buyers here, because many people were buying and then there is no one who was thinking the market will sell. So many people, they will keep chasing the market and buying, and then Jiggy will be surprised left there, the market over here fast with high momentum. You see, so that's why I became a bank trader, because I usually chase the market. By the time it buys, I usually buy it, and then you'll be surprised, out of the blue, the market will like maybe start selling. Now one. So this is what happens during the day when the market start creating this bullish liquidity void. It start going up in a fast move. You don't chase it, you just leave it, and then the moment it starts resting here, it's where you look for your reversals. And then here we had a nice confirmation for a break of structure here. I don't know if you can see here. This was a nice clear a breakout of structure, because the market, if it was really serious about going up, it should come and do this. And then it continues breaking, clearing this high there, going up in the form of a zigzag. You know the properties of a trend. It has higher highs, higher lows, something like that. So unfortunately, the market managed to fail. It failed to create a higher high here. It created another low below this high. So this was a nice BMS, a break of market structure, which is giving you a signal that the market is no longer serious about buying. So for me, I should be able to catch it somewhere there or here, because I can be able to study the candles and see how the market price is going to react. So anyways, at the end of the day, you enter here. This is a rejection block. A rejection block, it's a block where like it's formed by this rejection here. So these rejections are simply telling you a lot of things. And then at the end of the day, you got an entry there. And then you sell here, you stop loss guy above here, stop loss. We had a rejection block there, or here from the BMS. So you can set some trades here, stop loss, someone's there, and then TP here. Simple like that. So once your market reaches to this level of your TP, you won the trade, you are free to exit. You are free to exit. Because this is not a longest trade where like you can hold. You just aim to get the balancing of the buy side. And then at the end of the day, you won. So you sell there, you won there. If you can check, risking something like this to lose there, and then to win here. So you see there is something healthy to take. Then let's check other pairs. So now going to be fast. So this, remember guys, it applies on every time frame, So okay, another one here it is. We had a blast move there of sellers. We take from the rejection. take from the rejection. Here it is. Here it is. We had a rally, a decline in market prices there, level. We had, so by the moment it starts declining down, like it's a blast move where we only had sellers. So we don't chase it. Remember, you don't keep selling. When you just wait and know the market will come back and refill. And then fortunately there, we had a break of market structure somewhere here during this zone. And then at the end of the day, you know, if you buy, okay, let me erase this. Here we had a small initial bank's liquidity level. And then here we had another confirmation as our BMS. Our BMS break of market structure. If it was serious about going down, it should be creating a series of lower lows and higher lows. And then you buy from that level, you know to exit somewhere there because you took from the previous start of that movement. So it doesn't mean like it has to create 100%, but then you know that the Forex market doesn't have 100% retest. But then you've won because you can be able to see that the market won't keep going down, only having sellers. It also has to do what? To also at least try to buy and balance the side liquidity. And then here we had another one. You see? Another one. Let me simply be fast here. We had another one. We had another one there. So we took from the start of the previous candle, the green candle before the start of that previous downfall. And then the market started to do what? To crash in prices. So we only had buyers. So if you can check, it came back again and refilled that zone. You see, it refilled all the sellers there. So you buy, it's low. If you can check, it's fast when it declines, but then it's low when it imbalances that previous movement. You can even check here. It was fast, but then it was low. Simple like that. Simple like that. It's very simple. So this, guys, is what I do usually on NAS. If you can check me after 3:30. The moment it starts creating a bullish liquidity void, it runs up. I don't chase it. To refill that zone. So let me check if we're still having another one. Let me check a clear one. So mostly by fundamentals, you just usually leave the market runs up, then you come back with it. It's what happened today when I shared that signal. Yes, sell. The market, I saw that buy, but then I couldn't send the buy because I know the market could continue buying for time, but it will only create a imbalancement. And then the moment it bought, I was just watching it, then I sent a sell. So let me check another clear imbalancement here. It works on every time frame, guys. Remember, it works on every time frame, so you don't have to rush for time frame. So, but it's best for you using it on H4, H1, maybe at least even 15 minutes. So another one, here it is. Here it is. If you can be able to see, we had a bullish liquidity void there. It went up, but jiggy, we had a BMS there. A BMS. And then it went where? It went down. Remember, where's your TP? By the start of that previous bullish liquidity void. At the end of the day, you created a nice entry. Another one is here. It was a fast move. Then there we had bank's liquidity level. Bank's liquidity. Then jiggy, the market prices went where? Back down. And then TP, previous. You can check previous start of the bullish liquidity void. At the end of the day, you won. So that's how it is, guys. I know this is not easy, but then if you keep practicing, it will be easy. So this, another one here it is. Another one here it is. The start, it went up and then created a high there. And then we had a BMS here, break of market structure. And then it went where? It went down. So it was a nice sell trade for you to win. TP here, stop loss above BMS. Level, stop loss above BMS. Then at the end of the day, you stop chasing the market, because if you chase the market, you want to win, you'll be left hanging up there. Maybe, let me see. Let me see. Okay. Another one is here. This one is Euro JPY. There is someone here. Oh. Guys, please stop drawing on the screen one. Okay, guys, fine. Another one is here. Let me erase this one. This is a very nice imbalancement in price action. Like what we take from that level, we extend. Here, and then reach here from that level. Guys, I don't know what's happening here. Anyway, guys, I'll just stop controlling the screen, man, because you're disturbing me here a lot. I'm trying to block you, but then it's denying and you waste my time. So fine, guys, here, no one knows the person. Okay, here it is. We had a fast move. We had only buyers, and then we had a break of market structure here. Even this one, it's another break of market structure. It's our BMS. And then here, it's our bank's liquidity level. So it was a nice reversal. And then at the end of the day, you got your sell, your TP inside the zone. And then you won the trade. It's easy like that. Or if you miss that entry of sell here, we have another entry here. Remember our rejection block. Here it is. So we had another retest in this level. It was very straightforward, simple like that. Here it is. Let me include this one. Then TP, same level, same level, same level, same level, same level. And then if you want to mark this level, you can also use its name here. Let's mark this level. Okay, let me see. Guys, don't forget, I want to show you something that I don't use. So this is how I analyze, easy like that. So this was a nice setup. This was a very nice setup. And then above there, it's our bank's liquidity level. Yeah, so here it is. And then from there, anything is straightforward. Anything is straightforward. And then your aim is for your market to come and refill this imbalancement in price action zone, and then you are out of trade. So good luck, guys. The session is ending now. I really appreciate your presence. So if you're having something to ask, just come to my inbox, and then this session will be uploaded in our Telegram channel. Good luck. We'll meet again next time. Thanks. And